Hey everybody, welcome to the Quarter Life Crisis Project. My name is Ryan Riccardella and I am so glad that you're here. Today we're talking about money. Cash, coin, paper, simoleons, etc. Whatever you want to call it, that's what we're talking about today. But we're not just talking about money itself. We're going to take a little bit more of a broader perspective to think about managing your finances in your mid-20s and, more importantly, having healthy attitudes towards money. They say that money makes the world go round. They're wrong. It's gravity. Read a book. But for better or for worse, money is really important, and we need to be proactive about how we manage it. The way that we manage our finances today is going to set the stage for how we're able to live into the future. So getting into best practices now is definitely in our best interest. But here's the flip side to that. Money can't be all that we think about. If we allow it to monopolize our thoughts, get it? We're going to be robbing ourselves of so much joy. Similarly, if we're using money as a measuring stick to evaluate ourselves, we're going to be immensely unhappy. So how do we strike that balance? How do we set ourselves up for financial success while not allowing money to take up all of our mental energy? Well, to think through that, I'm going to share my 4 golden rules of personal finance. Spoiler alert, the most important one is the last one, so make sure you watch the end. The first golden rule is to set financial goals. No one's able to predict or plan for their entire life, and there's always going to be curveballs that are thrown your way. But at a high level, think about what you want your life to look like. When do you want to retire? Do you want to have kids? How many? How much traveling do you want to do? All these considerations are going to dictate how much you should be saving and also the right asset mix for you. So give a little thought about how you want to be using your money into the future. The second golden rule is to save your money. Do not let your money burn a hole in your pocket. Make sure you're putting some away for a rainy day. We've all lived through and witnessed the financial crisis back in 2008, and we cannot take economic stability for granted. And it's not to make anyone fearful, it's just you need to be prepared for the reality that that might happen. And even if it doesn't, there's still things you're going to want to do in the future, like retire or send your kids off to college. And you're not going to be able to come up with that money all at once. So start now and you'll be much more comfortable moving forward. One of the things that gets in the way of working towards this golden rule and gets in the way of our savings goals is the trap of materialism, right? We do live in a materialistic society. People's opinions matter way more than they should. We've talked about external validation on this channel before, and unfortunately we do feel a very real pressure to keep up with the Joneses and have nice things and be able to show that we're comfortable and all this stuff, and we allow it to derail us. So refer back to those financial goals that you developed and keep your eye on the prize. They'll really be helpful to helping you from getting derailed. The other piece of it is materialism isn't attractive. No one likes when you flaunt your money around. You think it's gonna impress people or whatever, and it just makes you a dick and no one likes you. Unrelated, it's super hot here. I'm sweating super bad. Sorry about it. This again is about balance. There's a balance between allowing yourself to have nice things and making sure you're putting money away for a rainy day. And candidly, I struggle a lot with this one. I've said before on this channel, all these golden rules that I am not the master at achieving them or working towards them, right? I struggle a lot with these as well, but they're things that I feel like are going to help me make progress too. I struggle a lot with this, and I tend to be on the more put money for a rainy day side, and a lot of times I rob myself of joy and opportunities to have nice things or have new experiences because I hoard all my money, right? So I don't travel as much as a lot of my friends do. I don't buy new things a ton, and that's good. It means that I'll be comfortable into the future, but there are some things that will make me happy now that I'm denying myself of. And so it really is a balancing act, right? It's not to say that you can't buy anything new or not have nice things, right? But just make sure that you're tracking towards those goals. And if you are, then go ahead and buy yourself something sparkly. Third golden rule is to put your money to work. You work so hard for your money, make your money work for you a little bit. There are plenty of ways that you can get some passive income and grow your assets without even really doing much. It's all about where you invest it. And you have lots of different options with various levels of risk and potential that you can choose from. So let's go into each one individually. First option would be to put your money into a high yield savings account. So this is a super secure investment. You just put your money in the savings account in the bank and you know what your return is going to be year over year and you're good. Trade-off with this is that your return is guaranteed but also a little bit lower. So there aren't usually returns over 2.5% for savings accounts. So definitely secure investment, payoff's a little bit smaller. So put some money in here, but also think about some other options you have that could have a bigger payoff. Another option would be stocks and bonds. They're a little bit riskier than a savings account, stocks more so than bonds, but the payoff tends to be bigger. So allocating some of your assets for these investments is beneficial to you as well. Another option is a 401k or an IRA. There are some differences between a 401k and an IRA. It has to do with being taxed before or after you make a withdrawal from it. I'll put a link in the description that explains it because it's boring for right now. But this is, your retirement. Make sure that you are actively contributing towards your retirement. Best practice is like 15% of your income per month, if possible, should go towards your 401k and your IRA. And look into your employer's programs. A lot of times they'll match up to a certain amount. So if your employer matches your contribution up to 5%, make sure you're putting at least 5% of your income into your 401k because it's going to double without you having to do anything. Another investment option is real estate. We've talked about homeownership a lot on this channel before, the considerations that go into whether or not you should buy a home, including the financial considerations. And so if it's something that makes sense in your life, maybe it's time to pull the trigger. Real estate assets tend to appreciate over time, depending of course on the market and the area that you live in, but it might be another place that you can consider investing in. The most important consideration across all of these investment options is diversification. So don't put all your money into buying a home. Don't just cram all your money into a savings account. Spread your assets across them so that you have various levels of return and also are protecting yourself from various risks. So the degree to which you invest in each one is going to depend on your risk tolerance and your financial goals, but having even spread across all of them is super important. The fourth golden rule of personal finance, as I said, is the most important one, and that is that we make money to live. We do not live to make money. Money is a tool. It allows us to do the things that we want, but our end game, our end mission is not to acquire cash, right? It's to have rich experiences and have really fulfilling relationships, and money enables us to do that, right? It helps us to travel and support families and do all of these wonderful things, but the end game, as I said, is not to just have a fat bank account, because what good does that do you? There's actually some research to suggest that having money really doesn't make you happy at all. One phenomenon to consider is the hedonic treadmill. So the hedonic treadmill basically says that we have a baseline level of happiness. And over the course of our life, we have some really high highs and some really low lows, but generally speaking, we kind of always return to this baseline. And so getting more money, like maybe getting a raise at work, for a very short period of time, it's going to make you feel really good. But we're insatiable. And you're going to go back to that baseline level of happiness, and before long, sooner than you think, you're going to want more money again. And that cycle is going to continue over and over and over again. So if you're in this mindset of, oh, if I only made this amount, or this is my target salary, or I feel like I should be making more, you're fooling yourself because you're not going to ever be satisfied with the amount of money you make. So don't get into that mindset. In fact, there's other research to suggest that giving money away is what makes us happy. Spending money on other people, giving gifts, donating to things is so fulfilling and makes us feel good about ourselves. So money can help us be happier, but not in the ways that we think, not just having it and sitting on it. It's spending it on people, having rich experiences, supporting others with it. That's what money enables us to do, and that's how money makes us happy. But having money in and of itself is not the end game. So there you have it, the 4 golden rules of personal finance. Everyone's financial situation is different. Everyone has different financial goals. These are not hard and fast rules, but they're intended to be general principles to help guide us so that we have healthier attitudes and a healthier relationship with money and can be intentional about our finances. Let me know what you think in the comments below. Are there any that resonated with you more or any that you would add? I would love to hear about it. As always, thank you so much for watching. Be sure to comment, like, subscribe, hit that bell icon so you get notifications when new videos come out, and tell all your friends. The more, the merrier. Until next time.